Before we get started on today's trades, I just wanted to show you what last Friday, the February 17th, looked like on the FOR Renko on the ES. This was Friday's open here in California at 6:30 in the morning, and the market closes at 1:15 in the afternoon. So this was all the bars produced on the FOR Renko on Friday, which was I think a total of 14 bars in here. This was Friday's open, and this was Thursday's close. So you see it stayed in this range on Friday, but it would have been just virtually impossible to trade the FOR Renko on Friday. So any trading on the ES on Friday would have to have been on the 2 Renko, and this is rather typical of a Friday right before a long holiday weekend. Now this is the first trade of the morning on February 21st, 2012 on the ES 2 Renko. Now it was tempting to get in the trade right here after this squeeze, and when the swing cycle crossed below its variable band here, and pretty much everything looked like the equity was moving down, except for the Bollinger Band differential oscillator, which still was green on the midline here, still had the green dashes. It was still above the 0 line, and it was pretty much flat right in here. So I didn't short it right here, and it went up a few bars and then started to rapidly move down here, and that's why I didn't get in this any sooner than this. The bars were forming pretty fast, and I would just had to hurry up to get in right around this bar right here. And of course everything was moving down at this time, and this is where the Bollinger Band differential oscillator crossed below its 0 line right here. And I got out of the trade right here because it was certainly looking oversold right here as the swing cycle came down here, and the variable band was right close to the swing cycle. And the other thing was that the DIX is a pretty good divergence indicator, and you can see on this bar here the DIX was right here. However, on this bar and this bar, the DIX was here and moving up, so there was certainly a divergence right in through here. And because it looked oversold here, and because of this divergence in the DIX, even though everything else really was not indicating that the trend had come to an end, I got out of the trade right here, and it was for a 2-point profit. Now here's the second trade of the morning, and I should have played this totally different, but in any way I went in after this squeeze here on this bar here. I went long, and the swing cycle had already moved up here. This was Friday's close, actually, right up in here, and everything looked like an up move here, here, and here. This was midline bars had turned green, but it was still below 0 here. Now it hit some resistance here and bounced back, and this made me really apprehensive about this trade, and I was just about to get out of it if it would have gone below here at all. But it went up here. Now what I should have done was, up in this area, I should have put a buy stop right in here and got in at the beginning of this bar here. And because at this point the DMI differential had crossed above its 0 line, where over here it was still red and still just in the 0 line here. So also in this, on this bar here, the Bollinger Band differential oscillator was just moving above the 0 line right here. And so in any event, should have got in on this bar. however I got in on this bar, and put myself through the anxiety of looking like it was a bad trade, looking like that was going to go in the other direction here. In any event, when it got up here, it was obviously overbought. This was level of Friday's close, and right here you can't see it very well, but the swing cycle has started to move down below the variable band right here. So I got out right here at 13.64, and so it was just under 4 points on this trade right here. And also the DIX was moving down here, and so was the RWO right here, and the Bollinger Band Differential Oscillator had flattened out right here. So this looked like a good point to get out of this trade.